Hello everyone, welcome. Today I'm gonna discuss with you food and beverages cost control using John Wiley book, Food and Beverages Cost Control by Dobson. Okay, today is the copyright will be owned by John Wiley. So this is a chapter one, which is managing and revenue expenses. So we're gonna discuss this chapter. The outline will be based on professional food service managers. We discuss the profits for the reward services, getting started, understanding the in terms of income statement, such as profit and loss, and understanding the budget. Okay. All right. Let's look at the next one. Next slide. What is the profit? Profit is the reward for service. Revenue minus expenses equal to profit. The key is revenue must be higher than expenses in order to have a profit. That is sustainable. If expenses higher than revenue, that is not sustainable. That is called loss. What is revenue? Revenue is the amount of dollars an operation takes in. And expenses is the cost of the items required to operate the business. And profit is the amount of dollars that remain after all expenses have been paid. Okay, that is the key part. Again, let's start the food service business card, figure one here. You have a cash reserve. We're gonna do some purchases. Let's say I have a 10,000. I'm gonna buy flowers for my samosa shop, which is raw materials and labor, and then it's gonna produce the finished product, which is the samosa, and generates account. When we make a sales, we're gonna get account receivable or cash, and then after we get cash or receivable, then we're gonna buy again the supplies, and then it's gonna generate profit. The key part is always revenue higher than expenses. That's why it's to be sustainable. If not, if expenses higher than the revenue, that's going to be a loss. You don't want that. So what are the management process? The management process start with the planning here, and then organizing, and then directing, controlling, and evaluating. All the way. Planning, organizing, directing, controlling, and evaluating. Okay? What is the ideal expense? Ideal expense is the management view of the correct and appropriate amount of expense necessary to generate a given level of sales. The desired profit is defined as the profit that business owner wants to achieve at the level of revenue. Revenue minus desired profit equal to ideal expenses. The revenue, let's say 100,000, the desired profit, let's say 20,000, your ideal expense will be 80,000. Okay? There are four major food service expenses. The first one is food cost, second one is beverage cost, third one labor cost, and the last one is other expenses. What are the food costs? Costs that are associated with actually producing many items, and the second largest expense category. For example, the food cost. I want to create a samosa shop, so the flour, the sugar, the salt, and all the ingredients going to be my food cost. It's usually the largest or second largest of the cost. And then beverages costs that are related to the sale of alcoholic beverages may include the cost of food ingredients, mixer, garnish used to prepare drinks. Okay, let's say I want to make chai tea, or that the tea itself is going to be considered beverages. Okay, and then if you want to sell alcoholics, then it's going to be in Canada you have to have a license to sell alcoholic. Remember that, okay? And there's a monopoly control for any alcoholic beverages. You have to buy it on a certain store, like a beer store or anything like that. Okay. And then labor costs. Labor cost is a cost associated with paying of employee, including payroll tax. Cost management may be in this category, or there may be placed at the cost of manager in other expense category. Other expense include all expense that are either food, beverage, or labor. Example includes utility, rent, and advertising. In terms of percentage view, you can be in the form of percentage, or in the common here 1%, 10%, 100%, or in fraction 100. 10 over 100 or 100 over 100 or in decimal form. Okay, whatever form you like, it is the same concept. Okay, but most people are using percentage because it's easier to understand. Computing percentage means part divided by whole equal to percent. You got 10 divided by whole equal to percentage. Divide the number what is part by the number what is whole. Okay. Percentage computation, for example, part is smaller than the whole, 61 divided by 100, which is 61%. Result is less than 100. Part is equal to the whole, 35 divided by 30 is 100%, which is equal to 100. Part is larger than the whole, 125 divided by 50, which is 250, which is all greater than 100%. Okay, understanding income statement, profit and loss statement. P&L lists the revenue. Number one, the food and beverage cost. Number two, labor costs, other expenses. And then the last one is profit. P&L is also known as the income statement and the statement of income and expenses. Okay. Again, the uniform system of account for restaurant, we call it USAR. Uniform System of Account for Restaurant is used to help ensure consistency in reporting operating results in most food service units. The USAR is published by National Restaurant Association, which is called the NRA. A budget is a forecast or target for future performance to be achieved in a defined accounting period. Operational budget compare actual performance against budget performance. Actual divided by budget equal to percentage of budget. So, understanding the budget is that significant variation with planned result occur. Management must identify the problems, determine the cause, and take corrective action. This basically conclude our chapter 1. So hopefully we can see you again in the next chapter. Okay? Bye-bye.